Okay, thank you very much to, again, a couple of very inspiring companies, and also thanks so much, Barry Limore, our judges. Great job. Thanks also both of your sponsors of this event, and which is also a great opportunity to thank all of our other sponsors for this event. I think it was Groucho Marx who once said that I don't want to be a member of a club that is accepting me as a member. Well, I will tell you, my name is Gideon Soesman. I'm founder and managing partner of GreenSoil investments, and I'm extremely proud to be part of this club and the ecosystem we've been building over the last 5 years. I want to thank all our partners in this wonderful event. First and foremost, the entire Trendlines team, Steve and Todd, Nitsa, the Ag team, of course, Sarai, Michal, I hope this time she is in the room. She's again not here. Well, at the end, we will get her here and thank her personally. But also the others, Karen, Shira, Debbie, and the whole team. I also want to thank the Ministry of Economic Affairs once again for your support in setting this up. Startup Nation Central, who helped us to build this ecosystem and combine it with the wonderful event we had yesterday together with Strauss, the kitchen, in the food tech event. So thanks also to our Strauss friends. And I think we've proven again that 1 + 1 + 1 + 1 + 1 is much more than 5. For a good ecosystem, you need companies, you need corporates, you need universities, and of course, you also need the capital. Historically, when you look at the Israeli high-tech, most of the capital comes from, first and foremost, from the government. And Anja, you spoke yesterday about the OCS programs, and you'll be up to stage again later on. Angel investors, many of them that were themselves successful, are now supporting young companies, wonderful incubators, venture capital funds, and others. What we do not hear a lot about are the bigger banks, that some of them also are very active in high-tech and in ag-tech. And probably the most active and most professional bank when it comes to the focus on ag and food tech is Rabobank from the Netherlands. We have here, and I'm very proud he's here, our friend from Rabobank, who's director for large corporate food and Agri. Now, as you may know, I'm originally from Holland, so I have the advantage that I'm the first person in the last couple of days that can actually say the name it should be said. His name is not Jeroen and not Jeroen, and it's also not Jaron. It is Jeroen Leffelaar, but here in Israel we will call you from now on Jeroen Levy. So please welcome.
Gideon, many thanks, much appreciated. Ladies and gentlemen, thanks for the opportunity to have me here. And what I would like to do today is share our view on the gradual shift from intuitive to fact-based farming. And it may take a while, not necessarily my presentation, but the whole journey. And let's start with a slide you're probably very familiar with. And this is what we've noted as of actually the millennium 2000. I think we all recall the commodity price shift driven by increasing demand in the years from 2006 to 2015, which were related actually to the corn used for ethanol, the ever-growing demand for soybeans from China, and some years of depressed production due to poor weather conditions on top of already low stock levels, boosted agri-commodity prices. And at a certain stage, agriculture even became sexy and attracted liquidity away from other asset classes, resulting in land purchases and new equipment. But as of 2013, acreage expansion and 3 years of better yields have pushed US supply to exceed new demand levels. And as a result of this, substantial stocks for corn, soybean and wheat are around. And for this year, 2016, increased production will even result in another year of stock building. This including the flattening out demand for ethanol, but also lower exports in the US on the back of the appreciating dollar and the declining Brazilian rice. And also a flat demand in the US itself. So, just to show you what the impact of exchange rate volatility is about, here you can see that it's quite significant. But also, if I would add to that, that key producing countries like Argentina, Brazil, but also the Black Sea area have become more attractive at the expense of the US. But also countries like Brazil and Argentina took this opportunity to allocate additional acreage for crop expansion to maximize their current cost advantage. So what's the impact for the average corn farmer? We expect, first of all, that the current price level will, which is actually 20 to 30% lower than the recent highs, is or will become the new normal for the next few years. And this longer-term price level, which will be dictated by supply, by growing yield potential, acreage fluctuations versus a relatively flat internal demand and reduced exports, we ignore the impact of potential volatility caused created weather conditions. But you'll see that the outlook for the average corn farmer in the US is all but healthy. The combination of together low crop prices and high input prices will create another year of negative income this year. And it's not the first one, as you can see in the graph. So, as indicated, we expect this situation to last for a while. So in other words, in order to survive or to create better returns, the farmer has only one job to do, in addition to farming actually, is reduce its cost base. Crop farming is, as you know, a truly commoditized business with insignificant market share per individual farmer. So in a way, cost efficiency is the only way to survive. And farm manager actually got a job to do with respect to either cost cutting or yield improvement, and preferably a kind of combination of the two. And if there are ways to improve the economies of scale, even better. But how to act on the current situation? Well, in a way, a crop farmer has three items or three categories to work with, which are obviously the cost of the inputs, a combination of fertilizers, chemicals, and seeds, usually abbreviated to the FCS input, representing some 40% of gross crop value. And then you got farm equipment, averaging between roughly 50 to 20%. And then the remainder, the balance, is related to the cost of land, increasingly rental or lease payments, up to 40–45%. And if we start with the latter, then the cost of land has become a very significant cost item. And the cost of land is related to actually the changes in gross crop value. Lease payments are typically negotiated in advance of planting and usually also for a longer tenor of multiple years. So in a way, the current situation of low farmer returns, the cost of land is eventually expected to absorb most of the declining margins. If not, the farmer won't survive. And, or he will be forced to cut usage of essential inputs which may damage the farmland and impact productivity going forward. So, in a way, FCS and farm equipment are the most sensitive to the farmer's purchasing power. And like the cost of land, FCSs are negotiated and purchased before the crop is produced. And again, the farmer is confronted with his insignificant market position. And fertilizer, crop protection chemicals and seeds are increasingly offered by a consolidating group of producers, as was discussed this morning, if some of these mergers will materialize, which greatly diminishes the negotiating power of the individual farmer. So actually, farm equipment is the only category which farmers can directly control, unlike land cost and FCS, which are negotiated ahead of planting. The farm equipment expenses can be influenced during the farming season. And traditionally, it's been the first category to be cut during downturns. So if we would visualize the cycle a farmer is confronted with, then you see on income peaks, so when the days are still pretty favorable, and then you see what will happen if things will gradually deteriorate. And again, as I mentioned, starting off with the cutbacks in farm equipment. And then following by cuttings in fertilizers. Eventually, if inevitable, switching to cheaper seeds. And in the end, if you really have to, in a way, you're forced with your back against the wall, renegotiating of the land leases. In order to avoid capital constraints. And once things are bottoming out, which may take a while, then the farmer will focus again on optimization of his process by using the best ingredients he at that stage can afford. So, as shown on the previous slide actually, fertilizers, chemicals and seed each respond differently to changes in farmers' profitability. However, a consistent annual yield increase is the key to survive, to low-cost production and long-term viability of any farmer. And seed are and will remain a key input for farmers. So, if inevitable in a downturn, the farmer, as I show you, may be forced to switch to cheaper and conventional seeds. But innovation in seed science is actually driving the value of seed. And over the years, the value of seed has been growing at the expense of fertilizers and chemicals. So we actually suggest, or actually, this situation in a way suggests that seed companies have more power at the expense of produce of crop protection and fertilizers. Going forward, we expect, also given the mergers we're currently aware of, the increasing interlinkage between the seed treatment and crop protection companies. And we expect that seed companies are taking the lead in offering agronomic advice in the future. So, it's pretty clear that farming and the future of farming will involve smart equipment. No doubt about that. The time frame towards it, the journey may take another while, and no doubt there are different opinions, but modern farming equipment today is more precise than ever before. Binary decisions can be based on GPS information. However, decisions with respect to fertilizer usage, crop protection strategies, selection of seed varieties are still made by the farmer on a kind of rule of thumb or intuition. And although more information is as such available today, it lacks standardization and calibration. Data needs to be standardized before the average farmer will take the fact-based decisions. And going forward, you will see that an increasing gap between the large corporate farms, like we're seeing in the US, in Brazil, Australia, versus the small to medium-sized farms. Also in those countries, but particularly in Europe. And those bigger farms will be able to attract the best agronomic know-how and can afford the state-of-the-art precision ag technology because they can leverage the increasing cost over bigger acreage than the smaller peers can. So, in a way, in Europe, we may face the situation that there could be kind of catch-up since the average size of a European farmer is way smaller than in other parts of the world, and this is unlikely to change overnight. So, in order for the European farmers to stay competitive, they also have to switch to data-intensive agronomic practices. But individually, they lack the size and financial means to develop this themselves. So they will depend on others to do so. And European farms therefore may become dependent on their FCS suppliers, or potentially, but I'm not sure actually whether they're capable and willing and geared up to do so, corporates involved in the distribution of the FCS ingredients, which in a way can leverage their investment in aggregated data over a broader group of off-takers. So what could be the impact of big data? Well, we made some calculations, and no doubt there's room for discussion on that, and happy to do so, although I'm all but the expert. But it's generally assumed that smart farming, data-based farming, is likely to increase the yield of around 5%. But in some cases it might be more effective, in others it don't. Not all farmers will switch to data-based farming or smart farming. So we implied a 80% correction. And we allocated this calculation to the acreage for the top 7 crops. So these are corn, soybeans, wheat, cotton, rapeseed, barley, and sunflower. And the real number is, in our opinion, likely to be higher because we ignored the similar benefits for the smaller but higher value crops like sugarcane, potatoes, sugar beets, fruits, and vegetables. So if you make this calculation, then we feel that the value potential of big data farming for all farmers globally could be up to 10 billion. And if we would relate it to the situation in the US, it could lift crop yields by some 20 million tons, whilst the inputs could shrink 1 to 3%. And what would happen if you would do the same in Central Europe? You may be familiar with the production gap, which is related actually to lesser quality inputs, but also using of not necessarily state-of-the-art farm equipment. So we feel that if they would be able to farm like the other parts of the world, then the output might be up some 9 million tons, and it won't happen overnight, but that could be the upside. Therefore, not closing the gap which is up there, but at least it should be reduced. So, what's our view with respect to that journey? I think I briefly touched on the technical developments and the potential value of smart-based farming. But the process will be long, at least a decade or even more before we go from one extreme or one availability as it is today to the maximum availability with respect to technology and the impact on the decision of the individual farmer. So in the coming years, we will face an increasing usage of data and growing benefits. Sensor technology allows data from various sources to be combined in one user-friendly format. So data standardization will become common. Farmers will be enabled and therefore will, in our opinion, also increasingly make fact-based decisions for their seeding, irrigations, and fertilization. And then, at a later stage, probably some 5 years down the road, we may face a second phase of change, where the human factor in decision-making will be supplemented or even partly replaced by algorithms. Machines equipped with sensors will start executing real time. So they will actually work on these fact-based decisions. And eventually decision-making will become real time and fully automated with the help of algorithms. And developing these algorithms, as you may expect, will require a lot of data on the relationships between input and output on a wide range of circumstances with respect to soil condition, water availability, weather forecast, and the likes. And we expect that individual farmers won't develop these systems. And maybe apart from the top end in the US, Brazil, or Australia. We expect that the major developments will be taken on by seed companies. I think also Adrian showed this morning in the slide how they're dealing with big data farming. And, but maybe apart from the seed companies, it may also be the farm input suppliers or a group, a combination of agronomists. And as a consequence, actually, we expected input companies to become more comprehensive by involving from the sellers as they are today to fact-based solution providers. So developing smart farming practices will require an even closer cooperation between farmers, the input suppliers, the agroeconomists, technology developers, and obviously the off-takers. It's new territory. There are no proven earning models today. So it's actually far from certain, in our view, whether farmers will realize the largest financial gain from smart farming. To conclude, despite or actually in addition to the excellent introduction by Gideon, what is Rabo about? We are a cooperative bank founded by farmers some 120 years ago, indeed in the Netherlands. And in the Netherlands, we're an all-service bank, dealing with individuals, corporates, whatever industry. But internationally, our business is solely about food and agri. And we're dealing throughout the whole value chain, from individual farmers, through our rural outlets, as we tend to call these, to corporate clients in the wholesale division, where I'm part of. And we were internationally pretty well represented. We're in 43 countries, but also doing business in countries where we haven't got a presence, like here in Israel. Another distinctive element is that we're in for the long haul. We're relationship driven. We claim to be familiar with the peaks and the troughs of farming, so we are supporting the parties throughout the cycle, even in the case when a harvest is less than anticipated. And we enjoy solid relationships with global leading companies. Here is simply an overview of the various logos. In the wholesale domain, I think the overall relationships are exceeding 1,000. And if you would like to know what have we committed to these clients, it's in excess of $72 billion. And apart from lending, which is in all fairness our main source of business, we're also in treasury and risk management solutions, equity capital markets, and strategic advisory, including M&A. But there is one other element which may distinct us from other banks, and this is our dedication to research. We feel if you want to be a good bank, and particularly if you want to be the leading food and ag bank, you better know what's going on in these businesses. So we employ some 80 analysts globally, focusing on the dynamics in 9 sectors. Throughout the chain, from the very beginning, from farm inputs up to food retail. And the intelligence gathered from these analysts is shared with our clients, and we use it obviously also internally. And internally we use it for our internal risk assessment, but also as input for our M&A franchise and for marketing purposes. Actually, one of these guys prepared this presentation, in all fairness. And this is separate from our in-depth company equity research, which is part of our brokerage franchise. So what are the services we're providing to businesses in the farm inputs domain? We're comfortable doesn't necessarily mean that we know how commodity prices will behave, but we're familiar with the insights of the value chain. And actually that gives us the comfort to provide a broad range of tailored financial solutions to farmers, to agri-commodity traders, farm input companies, to optimize their working capital in order to improve their asset conversion cycle. So in a way, our products vary from managing inventory levels, monetizing receivables, or supplier finance. And here in Israel, actually, we enjoy good relationships with Adama, Netafim, and ICL. And actually, we're interested to expand our client base here. I think, if I'm honest, we're probably not able to compete with the local banks, but happy to work with these new companies internationally, as we are doing with those 3. I think that's where our strength is, not necessarily here locally. Another product range we're providing is a broad range of vendor financing solutions. In a way, supporting farm input companies and their crop farmers in their joint relationship by offering vendor finance solutions to the input companies, allowing them to provide a certain credit to the individual crop farmer so he can finance its input material. So, in addition to banking, we are committed to what's going on in this industry, and actually we feel the responsibility to be part of it. And that's what we call internally banking for food. We are committed to innovation in global food and ag tech. That's also, apart from being invited, also the reason for being here. We want to know what's going on and where we can add value. And obviously, as you would expect from a bank, we're in financing. So in this situation where we try to come up with equity or debt-based solutions for growth companies with a limited growth record to date, but with a proven concept, established customer base, and hopefully close to a positive EBITDA. And let me manage your expectations. It's still a challenge to get it all improved internally, but at least I feel the necessity that if we want to stick to our clients base going forward, we have to adapt our way of working. In addition, we are helping out private equity and venture capital funds on fundraising, subject to being focused on food and ag. Today, we are a cornerstone investor in some 10 focused, food and ag tech focused seed capital or VC or private equity funds around the globe, which is actually an heritage as we used to run these funds ourselves. However, changing banking regulation forced us to push these funds away from us, given the huge capital requirements. But in a way, we're still committed, and we feel this is also a way to show that we're putting the money where our mouth is. But again, don't expect us to make significant additional investments to the funds we're currently in. And in the end, we're also willing to be at help in the case there are no immediate financing opportunities, simply by sharing industry knowledge or networks. And we're also organizing our events in a way similar to what we're enjoying here today and what we had at FoodTech yesterday. We try to share our knowledge through transformational events like Food Bites in the US. We'll actually be in Australia later this year, and we're organizing a joint edition of FNA Next and Food Bites in Wageningen with the Wageningen University next year. So if you feel that this kind of talk about the dynamics in agriculture and the gradual shift to smart farming is addressing your needs or you're interested, then you're most welcome to join us at FNA Next in May at the Wageningen campus next year. Many thanks for your attention.
Jeroen, thank you. I got a lot of, a whole bunch of questions came in here.
Oh my goodness.
I'm here, but actually because we're in Israel, the majority were not questions but remarks, statements and opinions. So luckily from the questions we have, there were a few questions around the value chain, but the cost fundamentals, the supply-demand fundamentals, and then the question that came back was, with those fundamentals that you showed, do you think that this is really long-term an attractive market for VCs, for private equity? And do you see the returns based on the fundamentals that you showed in your presentation?
I think the major question, and I don't know the answer, is how. I think it's inevitable that the farming will change. It will become more tech-based. And the question is obviously how will a farmer deal with that, and what can he afford? Obviously, this is now in a way the downturn in crop farming, but they enjoyed certainly a different period as well. So it's with the peaks and the troughs, but I think also the increase in acreage is limited. The higher yield is required, so they have to do some things differently. So if the new technology can improve their efficiency, they'll find a way to fund it. And otherwise, they probably call on us.
Thank you again, Jeroen. Thanks for being here.
Thank you.